G'day there. Welcome to today's instalment of The Closing Bell, recorded on the 23rd of June. And boy, what a difference a week makes. Aussie market hammered over the last couple of days. I'm recording this on Friday, currently down 50 points after getting hammered about 120 or 130 yesterday. I have been outlining the potential of what can happen if this thing rolls over. I think I'd like to just really outline it for you today to drive home the point that it does look a little dangerous from here if it does crack much lower. And just wanted to point out where the US is as well. That's still very strong, but I was pointing out last week, it's up in that point, that major sell zone, where if it does sell off from there, it can look terrible pretty quickly. So I wanted to start off today by having a look at the Commitment of Traders report from last week. You can have a look at what came out overnight. They would have released a new one on Friday night, our time. But I'm showing you last week's, which does show that there was quite a bit of short covering going on as the market was rallying. So that's just an interesting thing for me to point out for you, how the positioning has been changing as the rally has been taking shape in US equities, which puts it on a bit of a shakier ground, I think, with a lot of short covering going on. There was a big short position out there at the moment, and that has slowly getting whittled down, but is still quite large. Let's get stuck into it, and I'll just really take you through that S&P 500 and the ASX 200, and maybe have a look at gold, which is under the pump a bit with interest rates still marching higher in the US. So let's have a look at what's going on. So this is the Commitment of Traders report, and I'll just outline the key things for you. This is for the S&P 500, the E-mini S&P 500, which is the most liquid. You've got the different types of traders: dealer, intermediary, institutional asset managers, and leveraged funds. Then you've got the other reportables, and then the non-reportable positions. That's your, this is where your regular traders would turn up, your small guys. And what I want you to note, there's the positioning, long and short, and you can see how they change from week to week. So in the dealer intermediaries, I think quite interesting to note here that they were selling their long positions while the market was rallying, and they were increasing their short positions while the market was rallying last week. Institutional asset managers increasing their longs. They're usually long. You can see there, 1 million long. They make up quite a large part of the long positioning. And there was, though, some short covering. So the open positions for the institutional asset managers down 50,000 last week to 332,000. And the most interesting thing is this leveraged funds. What I want you to note is the size of the short position there, 711,000. That's 25% of the total open position in the E-mini S&P 500. And note there, last week, down nearly 50,000. So still a big short position out there. So that can still feed a lot of buying if the market does turn up. But just interesting to note, and I'll be interested to see what happened to that this week, and I'll be checking that tomorrow morning. But interesting to note, there is a lot of short covering going on as the market rallies. There's still a big short position out there in that leveraged funds, which can still feed the rally in the US. And also note, there is quite a big short position open out there, isn't there? And you can see here, longs increasing. That's people chasing the market higher, but also shorts increasing in the non-reportables. That's the punters out there. So pretty evenly matched there. But that's just the main thing I wanted to point out initially, that a lot of that rally in the US, I think, could be down to short covering right now. So just moving on to the actual S&P 500. And just starting with that S&P 500 on the monthly, let's just note the trends over the years. Pretty good, that 10-month exponential versus the 20-month simple. And just noting we are still in downtrend. So that's one thing to note. This thing can still roll over from here. I've seen it happen before. And I guess the other point to make is when the market is trending up, I've got these Bollinger Bands here around that 20-month simple. That's the 1 standard deviation, 2 standard deviation Bollinger Band. When the market's trending up, I'm often looking at that 1 to 2 standard deviation below as the point where I'd expect markets to turn back up. So that when the market is trending higher is often a good spot to be looking for opportunities to join the trend, as you can see over and over in the last 10 years, and even in that sell-off last year, it happened. But when it's trending down, often the reverse is true. So if we're looking at this and saying this could still sell off, this rally we've seen from support has gone up to where I'd expect the resistance to come in if it is going down. So that's the first thing to point out. Next really is that key thing that I always show you, which is the waves that occur and where the buying and selling pressure often comes in. So I have that midpoint, which is the point of control. You can see prices bounced off there last year exactly, which gives you a sense that this wave is the thing we want to be looking at. And then I have those buy and sell zones, don't I, within that wave, which is the area where I expect there's a high probability that you see reversals and a move back to the point of control. So where prices are right now, the top of the sell zone of this wave up since 2020. This is a monthly chart, so you're seeing a lot of data here. So currently where prices are right now is the spot where I'd expect the selling pressure to come in. And I can also look in a bit closer and even just look at the wave down, because really what I'm looking at is what is the market positioning across time. And if I'm looking at that wave down, this is the last few years trading that we've seen, the sell zone of that coming in around this area. So this is the area where I'd expect where people are getting long, the people who have been getting short through this area, they're stopping out. As I was saying over this last period, if we broke through that high, it does change the picture somewhat, and it has. So this is where it's sort of interesting whether this uptrend is going to continue, and it can, because the short term, the weekly trend is up, and I'm allowing that weekly trend to play out. But I just want to give you the points where there can be pretty serious resistance. And looking at that, this area right here is pretty important, the bottom of that sell zone of the wave down. So that's really an area of about, what is it? That's 44.86, let's say. So 4,500 up to 46.50. So that really is the area. It can still have a few rallies, can't it? But I just want you to be aware that this rally now, and if it is short covering, driving it higher quickly up into the selling pressure, it can turn back down quite quickly, as we'll see in the Aussie market turning down. So just be aware that that is what's going on. And if we do see, if I shift over to the weekly now, and on this weekly, we've been watching the way these down waves have been taking shape, and it has had that bullish break above the lowest high in that downtrend. So this could be the beginning of more upside, no doubt about that. But what I want you to just be aware of, if you want to be looking at it from both points of view. So this is the weekly, and it's busted up through those highs. So that uptrend is alive and well. And the first things I'm going to be watching out for really is that I need to see a weekly sell pivot from here. So if we do see a rapid sell-off from here, this will be the hint that I need to see that we've got to be a bit wary. And it hasn't happened yet. So, it could keep marching higher. But the low of that around 4,300 in that S&P. So if I do see sharp selling pressure, which tells you that the big sellers are actually up here in that sell zone of this wave down. So if they are there, you really should see it fall away pretty rapidly, as we've seen in the ASX. And if it does then have a weekly sell pivot below that 4,300 level, which would also bring it back below that high there, giving you a sense that it's been a short covering flurry, which has found the serious selling pressure, and then it goes back down. That's when I'm getting wary. And of course, it's not until we do see the weekly trend turn down that it really is starting to look pretty dangerous. So that weekly trend has been up and is marching higher. We're allowing that weekly trend to play out. So this, it could, have a bit of a sell-off down to the buy zone of that and then take off again. So, you've got to allow this market. It's been so difficult to pick it one way or another, hasn't it? It's been a really tough thing to be analysing a market like this that's gone nowhere for a year, but it's starting to heat up. But I think getting overly bullish at this point could be a mistake. It's early days. I do need to see that selling pressure come out, though, before I'm going to switch back and say, well, be wary of this, that the failure here and the rejection from the sell zone of this wave could be quite dangerous because it could set off quite a chain reaction. So that's really the thing I'm waiting to see how it plays out. And look, if it comes back, finds the buying pressure, bang, takes off, certainly above that all-time high, I'll be changing my tune quite a lot. But just making sure you know that it's in that spot where people are bullish, the articles are bullish, but it can see the real selling pressure come out again, and the whole thing can roll over from here. And look, I think the ASX 200 really is the one that looks the most dangerous. The S&P still weekly uptrend, looking good. It can keep rallying. I need to see selling pressure before I get bearish, really. But the ASX, it is ticking a lot of boxes at the moment, saying beware. And I want to outline again for you, just to make sure new people understand what I'm looking at and why I'm pretty interested about what's going to happen in the next few weeks. This is the monthly going back. This is the 07 high and the big sell-off and the crash in 08. And always looking at these major highs as very important, because you often see false breaks of those major highs. You can see there the crash going into 2020, false break and failure. That's just how markets move. It's how they fool everyone. Just to prove to you, as the market rallies, see that false break, sell off. Rally, false break, sell off. Rally, false break, sell off. Rally, false break, big sell off. So that's how markets move, how they fool everyone. And looking at this serious situation we've got now, there's that 2020 high. I've been warning really since 2021 about the situation, or 2022, about the situation, that it was, we were going to go into a period of bearishness. Now it's ended up being 2 years. It really is frustrating as hell, let me say, trying to do this job in a market that's going nowhere. But you can see we've got the monthly sell pivot happened there, and lots of work done before the big sell-off. And we're in a situation now where it's really evolved and giving me the sense that it is possibly rolling over again. And that's where I'm wary of this situation, because we've had one wave down already. You can see there, we've had this miraculous rally from there. And if I'm looking at that wave, this is what I've been pointing out for quite a while. You should understand it if you've been following along. We've got the sell zone of that wave. So that's where I expect to see the selling pressure coming back in. We've got the point of control of that wave, you can see there. And of course, we've got the buy zone as well. And just want you to note that we have seen already quite a few moves. You can see the bounce from that low back to the point of control, the sell-off down to the buy zone, back to the point of control again, a rally up into the sell zone, down to the point of control, up into the sell zone again, down to the point of control. And I want you to note that this whole rally, finally, after this year, we've seen the monthly sell pivot last month. And this is why I've bought, basically in my retirement trader, a hedge on our positions because of that monthly sell pivot, saying that potentially the market is rolling over. So this is how waves move: big sell-off up into the sell zone, and then the next wave. So that's what can happen as downtrends develop. So it's taken a long time to play out, but you can see that move up into the sell zone. It's really taken a long time to roll over. We've got the monthly sell pivot. We had a rally up into resistance, and then it's been hammered this week, giving you the sense that the sellers are there. So now we're moving to that next stage. And the next stage is, does it break below those lows there around 6,800? And of course, that would be also a break below the point of control, which would give a target to the buy zone to start with. So you're looking at here potentially what could be a quick move down into that area. Then maybe, it takes a long time to play out. Maybe that's it, and the thing takes off again. I don't know. But if I'm looking at the big picture and thinking about how it can evolve, I'm a little wary of what can happen due to the long-term channel that you've got going on there. I don't use trend lines. I more look at a linear regression of, a line of best fit of how things are moving. You can see it's up near the top of that channel there and rolling over back to the downside. If it was to break through the point of control, head to that point, and obviously the low of that move last year is where it's really dangerous. That's when you're looking at a move like that. But I reckon that's great buying based on that, very long-term channel. So that's why this move just recently, if I move to the daily, and you can see on this daily chart, we've got the 200-day moving average there. So it's been flirting with it, trying to bounce off it. The resistance is up here, which is happening over and over again, getting back to that point of control. It's just been really stuck, hasn't it, for a long time. If I was to look even just at that wave down there from a few months ago, you can see getting rejected from the sell zone of that wave. So it's just taken a long time to take shape. And is it ready to bust through this 200-day moving average, which is going to give targets back to that point of control, which it's been visiting over and over again. And then, watch out if it does actually head below that 6,800. That's the spot where it can really sell off. So just a bit dangerous, and I need to see it really, back above, these highs, really the all-time high. That's where my stop loss is on the short position we have on in the index. If the market can hold around here and rally up through the all-time high, the situation will be very different. But currently it's now looking a bit dangerous that this thing can roll over, and it depends on the US price action, I guess. But yeah, we're sort of underperforming. Market's really slowing down. Retail stocks getting hammered. Commodities a bit soft on back of growth. So we're really in a situation where Australia could be in for a bit of underperformance, and yeah, looking a bit dangerous this next few weeks to see what happens here. And hopefully you feel forewarned with what I've been sort of sending out, although it's been very difficult, hasn't it, with a market doing nothing for so long. All right, I think that's enough. Just, I guess, quickly on gold, because I did say it. Gold just under the pump a bit. This is the weekly chart, and there's that rally from a few years ago, and just looking at the range it's been in this correction, and you can see that it's been rejected from the all-time high. So a little false break there. Weekly sell pivot a few weeks ago, and starting to march down close to a weekly trend shift. So not much support here for gold. It could actually sell off a bit more. There's plenty of support down around there, 1880 to sort of 1825. Let's see how it performs there, and then could turn back up. But it depends on rates and what's going on there. So just looking a bit soggy on the gold price right now. I think ultimately it's going to find support somewhere down here, and end up doing something like that. But yeah, it has to hold above that 1625, and it can still all look okay, I think, in that gold price. So just short term, gold under pressure. All right, that's enough. I'll come back with more next week. Cheers.